Silver just hit $58 per ounce. That's a new all-time record high. It has doubled in 2025, and I need to show you why $100 is coming in the next 12 months while gold barely moves. Nobody's prepared for what's about to happen. Silver is up over 100% in 2025. It went from around $29 per ounce in January to $58 today. That's not hype. That's not speculation. That's what actually happened. While everyone was focused on Bitcoin and AI stocks and everything else, silver quietly doubled in value. But here's the crazy part. The move to $100 isn't about another doubling. It's about silver finally catching up to where it should have been all along. Let me start with something most people don't understand. Silver has been in a supply deficit for 6 consecutive years. That means more silver is being consumed than is being mined. Every single year since 2019, we've used more silver than we've produced. In 2025 alone, the deficit is projected to be 117.6 million ounces. Think about that. We're short 117 million ounces of silver this year. That's nearly 15% of total annual mine production. And this isn't a one-year thing. This has been building for 6 years straight. Now, in any other market, when you have sustained deficits like this, prices explode. Basic supply and demand. Less supply than demand means higher prices. But silver hasn't behaved that way, until now. Why? Because the silver market has been manipulated for decades. Large banks, particularly JP Morgan, have been accused of suppressing silver prices through massive short positions in the futures market. They create paper silver out of thin air and sell it to keep prices down. But here's what changed in 2025. The physical market finally broke away from the paper market. People started demanding actual metal instead of paper promises. And when that happens, when physical demand overwhelms paper manipulation, prices explode. Look at what's happening right now in December 2025. Shanghai Futures Exchange warehouses have silver inventories at their lowest level in a decade. In London, a record volume of silver moved into vaults last month, tightening supplies everywhere else. Silver-backed ETFs added 200 tons in a single day this week, the highest inflows since 2022. This is a physical squeeze. Real buyers demanding real metal, and there isn't enough to go around. Now let me explain why $100 isn't just possible, it's probable. And I'm going to give you multiple reasons, each one strong enough on its own, but together they create an unstoppable force. Reason number 1, the gold to silver ratio is completely out of whack. Right now the ratio sits at about 73 to 1. That means 1 ounce of gold costs 73 ounces of silver. Historically, this ratio averages around 50 to 1 over the long term. In ancient times, it was 15 to 1 because that's roughly how much silver exists in the earth, its crust compared to gold. So at 73 to 1, silver is dramatically undervalued relative to gold. If the ratio returned to just 50 to 1, and gold stays at current levels around $4,200 per ounce, silver would be $84. If it went to the historical average of 40 to 1, silver would be $105. And here's the thing. During precious metal bull markets, the ratio doesn't just return to average, it overshoots. In 2011, the ratio briefly hit 30 to 1. If that happened today with gold at $4,200, silver would be $140 per ounce. This isn't wild speculation. This is historical pattern recognition. Silver always outperforms gold on the upside during bull markets because it's more volatile and has industrial demand on top of investment demand. Reason number 2, industrial demand is exploding. Silver isn't just a precious metal like gold, it's an industrial commodity. And the industrial uses are growing faster than anyone predicted. Solar panels are the biggest driver. Every solar panel requires silver for the photovoltaic cells. It's the most conductive metal, and there's no viable substitute at scale. As the world pushes for green energy, solar installations are skyrocketing. Global solar capacity is expected to triple between 2023 and 2030. That's massive. And every bit of that growth requires silver. The solar industry already consumes over 100 million ounces of silver per year. That number is growing by 15 to 20% annually. Then you have electric vehicles. EVs use twice as much silver as traditional cars because of all the electronics, sensors, and battery management systems. As EV adoption accelerates, silver demand accelerates with it. 5G infrastructure, which is still being rolled out globally, uses significantly more silver than 4G. Every 5G station requires more silver for connections and conductivity. Medical applications are growing. Silver has antimicrobial properties, making it essential in medical devices, bandages, and hospital equipment. Electronics, from smartphones to computers to appliances, all use silver. As technology advances, silver content per device is actually increasing, not decreasing. When you add it all up, industrial demand for silver is on an unstoppable upward trajectory. And remember, this is happening during a supply deficit. More demand plus less supply equals much higher prices. Reason number 3, investment demand is waking up. For years, investors ignored silver. They bought gold, they bought Bitcoin, they bought stocks. Silver was forgotten, but that's changing. In 2025, we saw massive inflows into silver ETFs. Physical silver dealers are reporting shortages. Premiums on silver coins and bars have spiked because there isn't enough physical product to meet demand. When I talk to dealers, they tell me wait times for Silver Eagles and Maple Leafs are at levels not seen since 2220. Some products are simply unavailable. This is with silver at $58. Imagine what happens when it hits 75 or 80 and FOMO kicks in. Here's what most people don't realize. The entire above-ground supply of investment-grade silver that's available for purchase is tiny. We're talking about maybe 2 to 3 billion ounces total. Compare that to gold, where there are about 200,000 tons, or 6 billion ounces, in investment form. But here's the kicker. The total value of investment silver at current prices is only about $150 billion. The total value of investment gold is over $15 trillion. Silver is 1% the size of the gold market. What happens when even a small fraction of gold money rotates into silver? What happens when institutional investors start allocating to silver? The market is so small that relatively modest inflows create enormous price impacts. This is why silver moves so violently. The market is tiny compared to its importance. When buying pressure hits, there isn't enough supply to absorb it without massive price increases. Reason number 4, the dollar is losing reserve currency status. We've talked about this in other videos, but it's directly relevant to silver. As the dollar weakens, as countries move away from dollar-denominated assets, they buy hard assets. And silver is one of the hardest assets you can own. Central banks have been buying gold at record rates, but some are also starting to accumulate silver. And if even a tiny fraction of global central bank reserves shifts to silver, the price will explode. Think about it. Central banks control tens of trillions in reserves. If just 1% of that moved to silver, we're talking about hundreds of billions of new demand hitting a market with only 150 billion in available supply. The math doesn't work unless prices go much, much higher. Reason number 5, mining production is flat or declining. Silver mine supply peaked years ago. We're not finding new deposits at the rate we're consuming existing ones. Most silver comes as a byproduct of copper, lead, and zinc mining, not from primary silver mines. This means silver production is tied to the economics of other metals. Even with silver prices doubling, you can't just turn on more silver production. You need copper mines or zinc mines to be profitable. And many of those operations are struggling with rising costs and declining ore grades. The Silver Institute projects mine production will grow by only 1 or 2% in 2025 and 2026. That's nowhere near enough to close the deficit. We'd need production to jump by 15 or 20% to balance the market. And that's not going to happen. Higher prices will eventually incentivize more production, but there's a lag. It takes 7 to 10 years to bring a new mine online from discovery to production. So even if we start aggressively exploring today, new supply won't hit the market until 2032 or beyond. In the meantime, the deficit continues. Inventories continue drawing down, and prices continue rising. Reason number 6, inflation and currency debasement. We've printed trillions of dollars. Every major central bank has engaged in massive money creation. That money has to go somewhere. And increasingly, it's going into hard assets as people realize their currency is being debased. Silver is the poor man's gold. It's accessible. You can buy an ounce for $58 versus $4,200 for gold. For regular people worried about inflation, silver is the obvious choice. And here's the beautiful thing about silver in an inflationary environment. Unlike gold, which is primarily a monetary metal, silver has industrial uses. So you're getting both the inflation hedge of a precious metal and the demand support of an industrial commodity. It's the best of both worlds. When inflation accelerates, which it will as governments continue printing money to fund their deficits, silver will be one of the best performing assets. Better than gold because of the industrial demand, better than stocks because those are priced in depreciating currency, better than bonds which get destroyed by inflation. Reason number 7, the technical setup is perfect. From a charting perspective, silver just broke out of a multi-decade consolidation pattern. It spent years building a base between $15 and $30. That base is now support. The breakout above 30 was significant. The move above 50 was explosive, and now at 58, we're in price discovery mode with no overhead resistance. Technical analysts look at the 2011 high of around $49 as major resistance. We blew through that. The inflation-adjusted 1980 high would be around $150 to $200 in today's money. That's the next major level. When you break out of a multi-year base like silver just did, the measured move is typically equal to the height of the base. Silver consolidated for about $35 worth of range. Apply that to the breakout level, and you get targets well over $100. The momentum is clearly to the upside. Every dip gets bought. The 50-day and 200-day moving averages are in bullish alignment. Volume is increasing on up days and decreasing on down days. All signs of a strong trend. Reason number 8, the short squeeze potential is enormous. There are still massive short positions in silver futures, banks and hedge funds betting against silver, but they're losing. As price rises, shorts face margin calls. They have to either post more collateral or cover their positions by buying silver. When they buy to cover, it pushes prices higher, which creates more margin calls for other shorts. This is how short squeezes happen. We saw a preview of this in early 2021 when Reddit's Wall Street Bets community tried to squeeze silver. The movement didn't fully succeed then because the coordination wasn't there and the timing was off, but it showed what's possible. Now, in late 2025, the setup is better, the fundamentals are stronger, the deficit is larger, physical demand is higher. If a squeeze starts, it could take silver to $100 in a matter of weeks. And here's what makes silver different from meme stocks. Silver is real, it's physical. When shorts need to deliver actual metal and there isn't enough available, prices can go parabolic. You can't print more silver to meet demand like you can create more shares. So those are 8 reasons why $100 is not only possible, but likely in 2026. Now let me address the skeptics and the risks. Because I want to be honest with you, some people will say, silver has been predicted to explode for decades and it never does. This is just more of the same hype. And that's fair criticism. Silver bugs have been wrong many times about timing. But here's the difference. The fundamentals have never been this strong. We've never had 6 consecutive years of deficits before. We've never had this level of industrial demand. We've never had ETF inflows like we're seeing now. The solar boom is real and accelerating. The EV transition is happening. The supply situation is genuinely tight. These aren't predictions. These are current realities. The other risk is a major economic collapse. If we have a severe deflationary depression, industrial demand for silver could collapse, taking prices down with it. This is a real risk. However, in that scenario, silver would still outperform most assets because of its monetary properties. And historically, even in depressions, precious metals hold value better than paper assets. Plus, governments will respond to any major crisis with more money printing, which brings us back to inflation and currency debasement, which is bullish for silver. Another risk is that some technological breakthrough replaces silver in key applications. Scientists are always looking for cheaper alternatives. But after decades of research, silver remains the best conductor. There's nothing close to replacing it in solar panels or electronics at scale. Could that change? Maybe. But it would take years to develop and deploy. And by then, we'll have gone through this bull market cycle. The final risk is government confiscation or restrictions. In 1933, FDR confiscated gold from American citizens. Could they do that with silver? It's possible, but less likely. Silver is primarily an industrial metal. Confiscating it would disrupt manufacturing. And enforcement would be nearly impossible, given how widely distributed silver holdings are. So yes, there are risks, but the risk-reward is heavily skewed to the upside. You're risking silver going from $58 back to maybe $40 in a worst-case scenario. But the upside is $100, $150, possibly $200 if we get a real mania. That's a 30% downside versus a 75 to 250% upside. Those are odds I'll take any day. Now let me tell you exactly how to play this. Because it's not enough to just know silver is going up. You need to know how to own it. Physical silver is the best option for most people. Coins and bars that you can hold. This protects you from counterparty risk. If the financial system has problems, you still have your metal. The most popular coins are American Silver Eagles, Canadian Maple Leafs, and Austrian Philharmonics. These are recognized worldwide and easy to sell. Bars work too, especially larger bars like 100-ounce bars, which have lower premiums. Buy from reputable dealers. APMX, JM Bullion, SD Bullion, these are established companies. Yes, you'll pay a premium over spot price. That's normal. Expect to pay $3 to $5 per ounce over spot for coins, less for bars. Store your silver securely. A home safe is fine for smaller amounts. For larger holdings, consider a private vault or safe deposit box, though I personally prefer having it accessible at home. If you don't want to deal with physical metal, silver ETFs are an option. The most popular is SLV. It tracks silver prices and trades like a stock. The advantage is liquidity. You can buy and sell instantly. The disadvantage is counterparty risk. You don't actually own the metal. You own shares in a fund that claims to own metal. There's also PSLV, the Sprott Physical Silver Trust, which is considered better than SLV because it is fully allocated and you can redeem for physical metal if you hold enough shares. Many silver investors prefer PSLV over SLV. Silver mining stocks are the leveraged play. When silver prices rise, mining companies' profits explode because their costs are relatively fixed. A 50% increase in silver prices might double or triple a miner's earnings. The big names are First Majestic Silver, Pan American Silver, Wheaton Precious Metals, and Hecla Mining. There's also an ETF called SIL that holds a basket of silver miners. The upside with miners is much higher than physical silver. but the risk is also higher. Mining companies can have operational problems, management issues, political risks in the countries where they operate. You're not just betting on silver prices, but on the companies executing well. My recommendation, do a combination. Have the core of your silver position in physical metal. That's your insurance, your safety net. Then add some exposure through miners for the leverage and upside. Maybe 70% physical and 30% miners, adjusted based on your risk tolerance. How much should you allocate to silver? That depends on your situation. But given the setup we're in, I think 10 to 20% of investable assets in silver is reasonable. That's aggressive by traditional standards. Most advisors say 5% in all precious metals combined. But we're not in traditional times. We're in a currency crisis, with a supply deficit in silver and industrial demand exploding. This is a once-in-a-decade opportunity. You don't want to underallocate and miss the move. Now, let's talk about timing. When should you buy? The honest answer is, I don't know if $58 is the bottom, or if we'll see a pullback to 50 or 52 first. Markets are volatile. Silver especially is volatile. But here's what I do know. A year from now, you'll wish you bought at 58 if the price is 100. You won't care whether you bought at 58 or 52 if it goes to 150. Trying to time the perfect entry is how people miss opportunities. They wait for the pullback that never comes, or they get shaken out by volatility and sell at the wrong time. My approach is to buy in increments. If you're putting $10,000 into silver, don't buy it all at once. Buy $2,000 or $3,000 this week. If it drops, buy more. If it rises, you've got skin in the game. This way you average in over time and remove the stress of timing. What price targets should you have? I think $100 is highly probable by the end of 2026. That's less than a year away. Getting from 58 to 100 is a 72% gain, which is completely reasonable given the fundamentals. If we get a real squeeze or mania, $150 is possible. That's happened before in inflation-adjusted terms. In nominal terms, we've never been there, but the conditions are ripe for it. My plan is to hold the majority of my silver until at least $100. At that point, I might take some profits, but I'll keep a core position because I think the long-term trend is even higher. Remember, this isn't just about 1 year. The supply deficit isn't going away. Industrial demand isn't slowing down. The dollar's problems aren't getting fixed. These are multi-year trends. Let me also address what happens if I'm wrong. What if silver doesn't hit 100? What if it tops out at 75 or 80? You still made money. You still protected yourself from inflation. You still own a tangible asset that has value. That's a win. The worst case scenario is silver drops back to $40 and you lose 30%. That's painful but not devastating if it's 10 or 20% of your portfolio. And even in that scenario, you still own the metal. It's not going to zero. You can wait for the next cycle. Compare that to people holding cash that's guaranteed to lose value to inflation, or people in stocks that could crash 50% in a market collapse. Silver is real money. It has been for 5,000 years. It will still have value 100 years from now. That's more than you can say for dollars or most other financial assets. I've been buying silver aggressively in 2025. I started adding to my position when it was in the low 30s. I bought more in the 40s. I'm still buying now at 58 because I believe we're going much higher. This is real money for me. This isn't a paper trading account or theoretical portfolio. This is actual capital I've deployed based on the conviction that silver is dramatically undervalued and about to enter a bull market that will shock people. Could I be wrong? Of course. But I've done the research. I've studied the supply and demand. I've analyzed the fundamentals. And everything points to significantly higher prices ahead. I'm putting my money where my mouth is. And I encourage you to consider doing the same if you find the case compelling. Now let me address the people who say gold is better than silver. Gold has its place. It's the ultimate store of value. It's what central banks hold. It's more liquid and easier to store large amounts of wealth. But for appreciation potential, silver wins. The gold to silver ratio tells us silver is undervalued. The industrial demand that gold doesn't have gives silver an extra catalyst. The smaller market size means bigger percentage moves. If you can only choose one, I'd say it depends on how much capital you have. If you're investing $100,000 or more, gold makes sense for the bulk of it with maybe 20 or 30% in silver. If you're investing $10,000 or $20,000, silver gives you more upside potential. Ideally, you own both. They serve slightly different purposes, and they both belong in a well-diversified portfolio during times of monetary instability. Let me also talk about the people who think Bitcoin has replaced silver and gold as the inflation hedge. Bitcoin is interesting. I own some. But it's volatile, it's speculative, and it doesn't have thousands of years of history. Silver has industrial uses. Bitcoin doesn't. Silver will always have value because industry needs it. Bitcoin's value is entirely based on people agreeing it has value. I'm not anti-crypto, but precious metals are tried and true. They've survived every currency collapse, every empire's fall, every economic crisis in history. That track record matters. Can you own both silver and Bitcoin? Absolutely. They're not mutually exclusive, but don't substitute one for the other thinking they're the same thing. They're different assets with different properties. Now let's talk about what a silver bull market looks like when it really gets going, because if you've never experienced one, you need to understand what to expect. Silver moves in violent swings, up 10% in a day, down 8% the next day, then up 15% the day after. This volatility shakes out weak hands. People buy at the top of a spike, panic sell on the dip, and miss the next leg up. You need conviction to hold through volatility. You need to understand the thesis, so you don't panic when you see red on your screen. This is why I'm spending so much time explaining the fundamentals. When you understand why silver is going higher, short-term moves don't scare you. In a real bull market, you'll see silver go from 58 to 75, then back to 65, then to 90, then back to 78, then to 110. It's not a straight line. Nothing ever is. But the trend is up. You'll also see premiums on physical silver spike to crazy levels. In 2020, when silver was around $25 per ounce, some dealers were charging $10 to $15 over spot for coins because demand was so high and supply was so tight. If silver goes to 100 and demand surges, don't be surprised if premiums go to $20 or $30 over spot. But this means if you wait to buy physical, you might end up paying $130 for $100 silver. Another reason to buy now before the mania. You'll see mainstream media finally start covering silver. CNBC will have segments. Financial advisors will suddenly recommend it. Your neighbor will ask you about buying silver. That's when we're in the late stages. The mania phase is when prices go parabolic. That's when we could see $150 or $200. But it's also when you need to be thinking about taking profits, at least on a portion of your holdings. I'm not going to try to pick the top. Nobody can. But when you hear your barber talking about buying silver, when your mom is asking you how to invest in silver miners, when every financial podcast is about precious metals, that's when things are getting frothy. At that point, I'll sell maybe 30 or 40% of my position, lock in profits, and let the rest ride. Because even after a mania top, silver will settle at levels far above where we are today. Let me give you a realistic timeline of what I think happens. Q1 2026. Silver consolidates between $55 and $70 as the market digests the 2025 gains. Physical shortages persist. ETF inflows continue. Q2 2026, breakout above $70. Move toward 85 to 90 as more investors pile in. Mining stocks start dramatically outperforming. Mainstream media coverage increases. Q3 2026, push toward $100. Volatility increases, big swings both directions, but overall trend remains up. Some profit taking at the psychological $100 level causes a temporary pullback. Q4 2026, either consolidation around 100 or a final manic push toward 120 to 150 if FOMO really kicks in. This is the hardest part to predict because market psychology is unpredictable. That's my base case. Could it happen faster? Sure. Could it take longer? Maybe, but the direction is clear. We're going significantly higher from here. Now let me address one more thing. Some of you are thinking, why are you telling us this? If silver is such a great opportunity, why not just keep it secret and buy more for yourself? Fair question. Here's the answer. First, I'm not a billionaire. I can't move markets. My buying, or a few thousand viewers buying, isn't going to impact the price meaningfully. The silver market is big enough to absorb that. Second, I believe in sharing information. I've learned from others who shared their knowledge freely. I want to pay that forward. And finally, I want to be right publicly. If silver goes to 100, and I called it in December 2025, that builds credibility and trust with you. If I'm wrong, you'll remember that too. So I have every incentive to be as accurate as possible. The bottom line is this. Silver just hit a new all-time high of $58. It doubled in 2025. And based on the supply deficit, the industrial demand explosion, the gold to silver ratio, the mining supply constraints, the investment demand awakening, the dollar's decline, the technical breakout, and the short squeeze potential, we're going to $100 in 2026. This is not financial advice. I'm not a licensed advisor. Do your own research. But I've laid out the case as clearly as I can. The fundamentals are screaming. The momentum is established. The opportunity is here. Most people will ignore this. They'll hear about silver hitting 100 next year and wish they'd bought today. They'll wait for a pullback that never comes. Or they'll buy after it. It's already run to 80 or 90 and then panic sell on the first correction. Don't be most people. Be the person who recognizes opportunity, who does the research, who takes action while there's still time, who positions themselves ahead of the crowd. Silver at $58 won't last. This is your entry point. This is your chance. A year from now, you'll look back at this moment and either be grateful you acted or regretful you didn't. I know which one I want to be. I'm buying silver, I'm holding silver, and I'm preparing for the bull market that's just getting started. Look, if you're getting value from this content and want to support the channel, you can join the elite members by clicking the join button right next to the subscribe button. Here's the thing. I don't promote scam products. I don't take money from sketchy sponsors to push garbage on you. The membership is what allows me to stay independent and focused on giving you the best information possible without compromising or selling out. You'll get access to exclusive members-only content that goes way beyond what I can share publicly on YouTube. Advanced research, deeper dives, real-time updates that I simply can't put in free videos. But whether you join or not, I genuinely appreciate you watching. Subscribe to this channel if you haven't already. I'm going to be tracking silver's move to $100, analyzing the market every step of the way, and showing you how to maximize this opportunity. You don't want to miss the updates. Leave a comment and tell me what you think. Do you